So I want to go over the importance of the opening print. Essentially, the opening print is the price that the market opens at. So this could apply for any type of ETF, any stocks, anything that trades within the New York session, or you could also use Globex Open, but that's more for trading overnight. I'm more so going to review the intraday session for New York session. So the reason why the opening print is very important is because it acts as a reference point for the whole entire session, right? Think about it. Right here, this is the opening print. Why is that marked out as an opening print? Purely because this is 9:30, right? So we want to mark the open of the 9:30 candle, so the opening price. So think about it this way. Everything that trades above the opening print is basically showcasing that bulls are in control. Everything that trades below the opening print, right, is more so saying that the sellers are control. Essentially, the reason why it's so important is because when using multi-time frame analysis, right, every single daily bar here has a open, high, low, and close, right? So to understand the general gist of that, we could take a look at, let me draw up this thing. We could draw this out, right? So let's draw a candle. So when drawing candles, there's always going to be an open, high, low, and close, right? So right here, this would be known as the open, right? So on the daily bar, imagine we're on the daily time frame, this would be the open, right? So this would be the open, and this would be the close, right? This is a very bullish bar. Now think about it. If this needs to form on the daily bar, how do we form a daily bar, right? We use the intraday session or the intraday data to formulate how the daily bar is going to close as. So if we take a look here, right, and we mark out the opening print here, you can see that the open is right here and we close at the highs here, right? So on a daily time frame, this would be open, right? Price tested the lows down here, right? And price ended up closing right here, right? So in theory, this kind of looks like more of a doji bar. You can take a look right here. Yep. So you see price wick down, tested there, reclaim the opening print, close near the highs, right? And it's such an important level because if you take a look at like multiple other sessions, right? So you could kind of use rules with the opening print based off your trading style. So let's see right here. Right here, let's mark out the opening print for this session. So 9:30 open, right? Opens right here. Once we fail to hold above the opening print, so bulls were unable to stay above the opening print, we clearly just caught, fades to the downside. You can see that we faded down here. We caught a potential higher low here. Once we broke below this bar, that triggered another 5-minute sell signal to the downside. This was clear that it was just pure weakness, right? Pure weakness. Hold. And why are these shorts valid, right? One reason you could use is because we are holding below the opening print. That's just, a key reference point. If you're below the opening print, it's safer to short. If you're above the opening print, it's safer to long. Not saying that it's invalid to long below the opening print, but you could limit yourself saying, I'll attempt 2 trades long below the opening print. The third one, maybe I'm just incorrect on direction for the day, and we don't want to reclaim and close the bar as a green bar, right? Let's take a look at this session, right? This session is pretty clear. So this session right here, once we opened up, we just held above the opening print the whole entire time. And typically when you have holds above the opening print, any type of pullback, right? So let's say you created a nice trend bar to the upside, right? So trend bar here to the upside, you catch a pullback. Any type of pullback, you could buy the pullback long, aiming for the new high of day, right? Very simple setup. Why are these longs valid, right? Because when you're trading, how I like to see it is that you could kind of use, okay, opening print rule, right? Above OP bullish, below OP bearish, right? It's as simple as that. It's just such a simple read. It's a simple indicator that gives you the level and a reference point saying that if we are dip below the opening print and we reclaim above the opening print, right, bulls are in control. If we open up and we hold above the opening print the whole entire session, bulls are in control. So if you know that bulls are in control, ideally you want to play the pullbacks or a continuation to the upside, right? Let's take a look at another day. Right here. Let's take a look at another day. Let's clear this chart out. Another day is right here, right? Right here, for example, right? You dip below. So if you take a look at now, if you use trend analysis, right? You can see the prior day is trending to the upside, right? Trend analysis, trending to the upside, right? This is all pre-market right here. This is the prior day session. Now you could argue and say, oh, because we're below the opening print, I want to go, I want to go short, right? Yeah, you could go short. You could have caught a move to the downside here, played the pullback, just risking a tag above the opening print here for a nice move to the downside. Or you could still reattempt longs, right? In hopes that we reclaim the opening print and we continue up higher. All right, so let's take a look at another day, right? So another day is right here. You can see how reactive it is on this day, actually. So open is right here. Once it reclaimed above the opening print, we rallied back to the upside, took out these overnight highs here. So overnight highs is right here, taken out, pulled back, retested opening print. Bulls tried to hold this, ended up dipping below opening print, right? And then we call it this is like a more so of a choppy day. So when you see an action like this where we hold above the opening print, pull back, break below, pull back, break up, you can see that it's a little choppy. But once we kind of had a news pump and just rallied up from there, the opening print just kind of says that, if price is above this level, essentially we have a green bar now, right? Now take a look at this day, right? This day right here, reclaimed above the opening print here, retested the opening print here. So you can literally see a clear retest of this opening print here, right? You could have bought the retest the opening print, traded towards new high of day, right? Not going to say you're going to top tick everything, but it's a good reference point, right? Once you got back below the opening print, right? Now we're kind of bearish on the day. Take a look at this. Back below the opening print, right? All we did was bear flag below it, created lower highs, right? Lower highs, and just targeted new low of day, right? So a very good reference point again. Let's take a look at the day before, right? Day before, right here. Day before, tried to break above the opening print. Once it failed to go higher and we held below the opening print, you can see a 5-minute strong bar close below the opening print, just straight fade from down there, knowing that if you're holding below the opening print, you could have just looked for short attempts, right? So a bear flag here, short the break below this bar, risking this bar's high. Why is the short valid? Because you have a strong push below the opening print, right? Let's take a look at this day right here, even clearer picture. This is the opening print, right? Opening print rule states that if you're holding below the opening print, shorts are valid, or more valid. Whereas if you're holding above the opening print, longs are more valid, right? So below the opening print, right, you can see that we just faded, faded straight to the downside. So that's the importance of the opening print. It's relatively simple, I would say. You just have to remember, right? Reason why it's so important during the intraday session for the New York session is that think about how a candlestick is formed, right? We can review that real quick. If this is the open, right, this down here is the open, and you're pushing up towards a high, you're going to have a bullish bull bar that closes up there, right? And how does that form? It's mainly forms if price is hovering above the opening print. So let's mark that out right here. This is the opening print, right? Let's say that, during the intraday session, right? Let's say during the intraday session, all right, let's mark this out like this, right? So let's say during intraday session, right? Let me see if I can grab this. Can I grab this? Yep, I can grab this. So let's say during the intraday session, just imagine this line as the opening print, right? Let's say that during the intraday session, once we open, we held just straight below the opening print, right? So you can see that the daily bar slowly forms to the downside. As you create more intraday bear flags, the daily bar is forming a close like that, right? And then let's say you kind of test at the low, but never close below the low. That's where you just kind of form your little wick. So it would be simply just like a wick down here, right? And let's say market ends up closing at this level right here, right? Let's say for a point that, let's say for some reason, for a bullish day, right? So let's put this away. For a bullish day, let's say you opened at the opening print, right? You opened at the opening print, so that's that green line here, right? Price at that time was also a red bar forming. So price at that given point was a red bar. Imagine this doesn't exist yet. So this one doesn't exist. Price was a red bar forming, tested all the way down here. And let's say at 11:30 during EST time, the price reverses, right? If the price reverses, it's going to create a wick, right? And the bar is going to start turning green again. So as the bar turns green, that just means that we are now in the intraday session holding above the opening print. And in theory, if you're trading, at least for myself, I want to keep, I want to trade and keep the larger picture or the bigger picture time frame in mind. Understand that, okay, like we're trading currently above the opening print right now, so that means that daily bar is forming green, right? If we're holding it above the opening print, I want a long. If we're holding below the opening print, it's okay to short, right? But you gotta keep in mind, equities are very bullish. It depends on what you're trading. So like equities are very bullish. You know, if you're holding above the below the opening print, you can still try some attempts long, because if you look at equities, we mainly into the upside. But if you take a look at something like GC, like gold, um, this is a clear, you know, like a clear downside move. You can see that hold below the opening print, straight fade to the downside. Of course, like you're never gonna catch the cleanest moves where you're gonna have days like this where, you know, price opens up, right? So let's draw a line up. Price opens up. Let's draw this day out, right? So what's happening at this day is that price initially was green for the session, right? So price was green and we're pumping to the upside. So for this bar, we're green for a session at a period of time. This was the highest point it ever reached, right? So keep in mind, this right here, the high of that candle is the highest point we ever reached. And if I now draw out a trend line, so let's just say this is the highest point we reached, right? And then let's say that during some part of the session, we start flipping back red, right? So now we go back down. Once you break below the opening print, you got to understand the daily bar is now forming a red bar, right? So it's something like this, the same exact action that happened here. So yep, that's the overall read of the opening print. Let's write it out again. Opening print, right? That acts as a reference point for the whole session, right? It tells us who's in control, buyers or sellers. And it's a level that is the first decision point of the day, meaning that it's basically the opening price of the session, right? So you could use opening print as support, as resistance, and just understanding, just keep in mind, right? Visualize as you're in a trade the larger time frame daily bar that's being formed. And yep, that's how I use the opening print intraday trading.